Well, I think the most important signal is what's happening to the gold being priced in dollars, and for that matter in other currencies. It's surprised, I think, most people the way it appears to have risen. But of course, most people look at it in the belief that it's gold rising rather than the dollar falling. But when people do understand it's the dollar falling, then you can understand that really what we're seeing is a very, very important event. And it's falling at an accelerating rate. And I'm looking at gold today. It's at 5,300. That is an enormous rise, if you like, if you think just in terms of its gold rising. But it's also an enormous fall if you think in terms of the dollar falling. Now, taking up that theme, the geopolitical situation, I think, is probably the most important factor we ought to look at. Because what is changing the price relationship between dollars and gold, basically, is the informed funds. I mean, central banks, governments, government wealth funds, large foreign owners of dollars are basically selling dollars and buying gold. Gold is real money. They understand this, and they're getting into it. Now, silver also, for most of Asia, is real money. So they're going into that. So what is actually happening? Well, China has already anticipated this. It anticipated this a long time ago because the Marxist universities always taught that capitalism would create its own destruction, and obviously the fiat currencies of the capitalists would go down with it. So the Chinese have prepared for this, and as I've said many times before, they really started accumulating gold in earnest and not declaring it in the sense of putting it on the PBOC's reserves. I mean, this is actually a very, very serious development, I think, this sort of innocuous shift away from trying to control the world to the Monroe Doctrine. And I think what it does is it brings forward the end of the fiat dollar, really to starting this year. I think we are likely to see the loss of purchasing power of the fiat dollar really accelerating this year. And how long will the fiat dollar last? Well, I can only assume it will last into 2027. But I think the signs are it's not going to last much beyond that. So in terms of what this means for ordinary people, you've just got to get out of credit and get into real money, which is gold.
Alasdair Macleod warns the dollar is collapsing as gold hits $5,300, showing currency's true decline. China accumulated massive silver stocks for 20 years, using J.P. Morgan to suppress prices. Silver squeeze is real, not speculation, with premiums at 15% in Asia. Copper underpriced 85%, suggesting 600% rise ahead. Fed will print massively as system fails. Thanks for watching. Give a thumbs up and subscribe to Fine Metals for the latest insights.
You can forget the stories about how, poor Americans and Europeans can't get anything for less silver scrap. I mean, that's not the issue. It really isn't. It doesn't matter as far as the silver price is concerned. There is no silver. And the interesting thing is that if you look at the statistics coming out of COMEX in terms of open interest, in both gold and silver, incidentally, and also the commitment of traders figures, you see that the amount of speculative buying is very low. This is all real stuff. This is a squeeze on the system. And so we have basically the prices being forced up by China, no longer supplying the West in the quantities which it has been prepared to do before. And in the West, I'd also include her own SCO members, such as India, who are now big consumers. And this is creating a crisis. And it's got nothing to do with speculation. So the idea that you see the silver price rising and, it's being driven by, sort of bulls and momentum traders, no, it's not at all. What's actually happening is you have got a systemic squeeze, which shows no signs of ending. What we're immediately seeing is we're seeing the price being driven not in London or in New York. We're seeing it being driven in China and also India, where the premiums are up to 15% over ours. And you would think that there would be some arbitration, but arbitrage rather. It doesn't seem to be happening. I mean, we don't seem to be seeing any arbitrage at all. Not enough, certainly, to dampen the price. Which really means, I think, the new licensing system, if it was designed to restrict silver exports out of China, then it certainly appears to be working. So I think that's the important point to realize. I mean, last night, we've got silver, I think at the moment, my screen's sort of gone dark on me, but I think we've got silver around about 15, 16, something like that. It closed last night in Shanghai at 130 equivalent. So that gives you an idea as to exactly where the pull in the price is coming from. Now, in my article, which you referred to earlier, I stated that I thought that what we were looking at was a new sort of version of Bretton Woods with gold being exchangeable for yuan at a fixed rate for the purposes of international trade settlement. I was speaking at a conference in New York back, I think in 2011, 2012, something like that. And there were lots of silver miners exhibiting, if you like. Obviously, it's all in the business of trying to find, more capital and all the rest of it, because with the low price of silver, it was quite a tricky business. But I asked them all the same question. I said, how do you turn your silver into currency to pay your wages, pay your energy bills, and all the rest of it? And they all said exactly the same thing. They said that the value of the doré is agreed by an independent valuer, who would be Glencore, for example. And on the basis of that, payment would come from a US bank. Now, this is obviously JP Morgan. What JP Morgan would do was it would pay the silver miner on the valuation. The silver doré would then be shipped to China to be processed, because processing is a dirty industry, and we sort of rather soft Europeans or Anglo-Americans don't particularly like this sort of
not in my backyard. Yeah,
not in my backyard, exactly. So China was basically taking all this stuff in, plus of course refining ores of copper, lead, zinc, and all the rest of it, where silver is present. I mean, it's something like 60% of silver mined actually comes from as a byproduct of these other metals. China was doing it all. They have accumulated enormous stocks of silver. This was all, this was really before photovoltaics and electric vehicles took off. And I'm convinced that the original thinking, but bear in mind that the responsibility for all silver dealing, if you like, in and licensing and all the rest of it, is the People's Bank of China, just as they have, if you like, the monopoly. They are appointed, if you like, by the government to handle all gold transactions as well. So, what's now happened, of course, is we've now got huge industrial demand. But I guess that we're now at the juncture where China is going to be very, very careful how much silver she lets to leak out into the West, for the very simple reason that she needs it herself for two purposes. Firstly, for potential monetization, and secondly, to feed into industrial activities. What we are likely to see, and this comes from my analysis of commodity prices in gold, which should be stable over long periods of time. I mean, obviously some fluctuation, but they should be stable over long periods of time. Because of the consequences of fiat currency losing its purchasing power, these commodities basically are extremely underpriced. They have become underpriced because we look at them in dollars. We don't recognize that the purchasing power of the dollar is actually collapsing. So what this means is that in 2026, we are going to see massive inflation push from commodity prices for a start. And I'm sure there will be other manufacturing costs in there, which will, if you like, increase on the back of it. This is something which nobody really expects. And when you get higher inflation, which is really a loss of purchasing power of the fiat currency, then foreigners and indeed domestic US institutions are going to require compensation for the risk of investing in US treasuries. We've seen commodity prices begin to rise, yes, but priced in gold. I actually looked at copper this morning. Copper is priced at around about 15% of its long-term gold value. Now, this implies that copper could easily rise 600%, 700%, just measured in gold terms, let alone in depreciating dollars. This is an extremely serious situation. Gold can be shipped in and shipped out of these vaults, basically in exchange for yuan currency. No other currency works for this. At some stage, we can expect China to fix the rate to secure the value of the yuan. In other words, as the dollar goes down, there will come a point where China feels comfortable in fixing the rate for trade settlement, for international trade settlement purposes, for the yuan, a yuan gold exchange rate to secure the value of the yuan in that context. You can move your trade settlements away and your trade, full stop, away from dollars into the new Chinese yuan CITS settlement system, which works without dollars at all. I mean, there are no dollars go through CIPS. So that is that. Now, the point is that there are huge numbers of dollars tied up in foreign exchange transactions. Because the way in which a foreign exchange transaction works, if, let us say, as a Brit, I want to buy yen, basically I sell sterling, buy dollars, I then sell dollars, buy yen. So the dollar is always in there in the middle. That is the way in which it works. It works on SWIFT and all the rest of it. The Bank for International Settlements did an estimate as to how much dollar credit was tied up in these swaps and foreign exchange processes and all the rest of it. And they reckoned it was around about $82 trillion. Now, under those circumstances, the authorities in America, to wit the Treasury and the Fed, have one simple duty, and that is to stop the whole system falling over. So what are they going to do? They're going to print. I mean, the budget deficit that we see today, which looks like it's working out about $2.5 trillion, is going to be more than that by a huge number potentially. So that's the sort of background. Now let's just look at silver for a moment. In geopolitical terms, this is interesting because I've been reading, and we mentioned it before we started this interview, that there's just so much silver around. You know, the retail market. People are trying to sell their coins. They're trying to do this. I mean, they're just dumping silver everywhere. All these wonderful high prices, having been disillusioned, if you like, for so long. I can understand that. But the problem, I think, for any intermediary, any bullion dealer, is that there isn't the refining capacity to recycle this stuff. And not only that, but if you look at coins, which have other base metals in them, the recycling process is not a one-off. I mean, you've got to do it several times in order to get pure silver. The margins in this are not all that great. And the refiners just don't have the capacity to take this on. That's why it's all clogging up, if you like, in America and also in Europe.